The Fed has officially decided to start lowering interest rates, and one of the companies that I've talked about that this could have a huge effect on is SoFi Technologies. So in this video, we will take a look at the Fed's decision to lower interest rates, as well as the effects that it could have on SoFi, specifically around their next earnings event. If you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. On Wednesday, September 18th, the Federal Reserve came out and announced that they were going to be lowering interest rates by a 0.5 percentage point. And this is the first cut in the Fed funds rate that we have seen since 2020. And the new rate is expected to end up somewhere between 4.75 to 5%. And there are two main reasons that the Fed has decided to cut interest rates. The first and probably most important driving this result is the unemployment rate. In August of 2023, unemployment was sitting at 3.8%. Over the course of the last year, it's risen to around 4.2%. And there's a lot of speculation right now that the Fed chose to decrease interest rates by a 0.5% instead of a 0.25% due to how quickly unemployment is rising. You have to keep in mind that when the Fed makes decisions to lower interest rates, this really does not have an effect on the economy until 12 to 18 months later. So the effects that we are seeing now are likely due to the things that the Fed was doing back in February through August of last year, which is really when interest rates started going above that 4.5% mark. And this lines up very closely with where the Federal Reserve members are expecting interest rates to head over the course of the next few months. By the end of 2024, the projections are that the Fed funds rate will be sitting at 4.4% and 3.4% by the end of 2025. The second reason that the Fed is very comfortable lowering interest rates by this much is due to what we have seen around inflation. In March of this year, inflation was sitting at 3.5% year over year. However, by August, it has fallen all the way down to 2.5% after a substantial decrease from July when it was sitting at 2.9%. And overall, the decreasing of interest rates has a positive effect on stocks. This is primarily driven by the fact that the risk-free rate is now going down. And what that means is you can no longer park your money in a savings account and get a 4 to 5% interest rate, which ultimately drives a lot of investors to rebalance their portfolios and potentially take on a little bit more risk and put more money into the market. And that has driven up the S&P 500 by about 2% over the last 5 days. But the lowering of interest rates will have an even more profound impact on businesses that are affected directly by these rate changes. One of those businesses being SoFi Technologies. And because of that impact, SoFi has moved up almost 9% in the last 5 days. We've discussed SoFi's business model before on the channel, but I want to reiterate here their lending business because they offer personal loans, private student loans, mortgages, student loan refinancing, refinancing of homes, auto loans, any sort of loan that you can think of. What that ultimately means is SoFi's lending business is affected a lot by the changing of interest rates. We can look at mortgage rates specific. Currently, mortgage rates are sitting around 6.1%. This is the lowest we have seen this rate hit since February of 2023. And even prior to that, rates shot all the way up to around 7.1%. So there are a large number of people that over the course of the last 2 to 2.5 years have gotten fairly high mortgage rates. And as we start to see these rates come down, there's an opportunity for SoFi to try and refinance some of these people to their platform. The general rule for refinancing your mortgage is that you want to wait until the rate has fallen by 1% below your mortgage rate. So what that means is if you have a mortgage right now at a 6.5% interest rate, you want to see interest rates fall to 5.5% before you refinance. So over time, what this should lead to is more and more people looking to refinance who took on loans over the course of the last 2 years. And this general practice of refinancing loans is very common across any type of loan, whether it's personal, student loan, mortgages, auto loans, doesn't really matter. Any of these could potentially be refinanced to SoFi's platform. So obviously these refinances should have a big effect on SoFi's earnings, especially a year out from now. If we start seeing these rates come down, there will be a lot of people a year from now that will be looking to refinance their mortgage. However, there is something that will affect their earnings in a more immediate sense, and that is the decrease that they will see in their net interest income. Net interest income was sitting at $412.6 million in the second quarter, which was up 42% year over year. In the next 12 to 18 months, I think we'll start seeing refinances and SoFi's lending business increase significantly. However, in the short term, I do think that there's risk on their net interest income and the effects that this could have on their bottom line. Ultimately, this is income that they have to do very little to achieve. They basically put their money in the bank and get this income from the interest rates that they're getting from that money. However, for refinances, it's going to take a little bit more upfront work for SoFi to get the ball rolling and get these members converted over into paying customers that are refinancing mortgages and other loans on their platform. And right now, analysts are pretty bullish on SoFi's earnings. For 2024, the average EPS estimate is sitting at 10 cents, with the low estimate sitting at 9 cents and a high EPS estimate of 16 cents. This is up significantly year over year when they lost around 36 cents per share last year. For 2025, they're expecting this to increase even further. The average EPS estimate is coming in at 26 cents with a low estimate of 11 cents and a high estimate of 36 cents. And even these estimates are a little bit old because the last change that we saw in SoFi's earnings estimates was around 30 to 60 days ago, when analysts changed their estimates from 24 cents to 26 cents. So if the Fed is even more aggressive with the lowering of interest rates, I would expect that these EPS numbers will start to come up. But overall, don't buy a stock just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a locomotive carrying bubblegum? Check the comments down below for the answer. Thanks for watching.